Okay, so I finished up my first week this double iron condor strategy. So I'm going to show you what I did here. Let me get the screen share. If I remember how to do that. Boom. Okay, so let's see. Here's the chart here. Go ahead and open that. So the iron condor is just a call spread and a put spread here. So I based it around the open price on Monday morning, which was right around here. So the first strike that I bought is right here on each side, or sorry, on the side of the red. And then I sold the next one here. Okay, so that black area there is in between my two strikes. So I put this red box there. That is basically, if it was going to be max loss, it would have to close it within inside of that. And then max gains would be inside the green box. Now these green boxes stop at particular marks. That's the outside iron condor I sold. Let's see, I sold the 265 and bought the 262. So that means if it gets below 265, I was going to start getting into losses on this one. So that's why I like selling iron condors. The credit I got was $28. The max risk is 300, which is not good. But because that gets into this area here, then it winds up being max gains on your inside spread. So, and it's reverse. If this other one closes somewhere inside of here, your max gains, you're keeping all the credit on this one. So these green boxes that I put on there was just, that's where it was max gains on both spreads. So if it closed somewhere within that area, and that's kind of within the implied move, obviously we got way outside of that. So a couple of things I realized though too was, so I opened the inside spread. I bought that one first thing in the morning. And then I also sold that iron condor first thing in the morning too. The ones that's got the strikes way out here. You're only getting, I don't know what, let's say $14 credit on each one of those when you're kind of in the middle. Later that day and even into Wednesday here, well, once it was in here Wednesday, is once that stock starts to move outside of that opening range Monday, I realized this side of the iron condor, you know, maybe you got $14 credit, maybe it goes down to 7, but this side maybe went up to, you know, 45 or something. So actually what I'm going to do next time is I'm going to sell, or buy to open this inside spread here. And the one I'm going to sell, the iron condor, I'm going to wait until it moves outside that opening range. Like right in here would have been a good spot. And even Wednesday right here, like I got a credit of $28. That, I looked Wednesday, I think it was around $70 or something. So if you waited till, you know, either later day, Monday or Tuesday, Wednesday, you might get a higher credit on that outside one. Now, this week it wouldn't have mattered. You're still going to close that one out, but normally it stays within that range anyway. And this was just, I think this had a lot to do with the Facebook stuff this week too. Zuckerberg kind of started to Zuckerberg whenever he didn't come out and say anything. I think people just kept selling it. And anyway, here's where we wound up. So what I did do was, well, hold on, let me back up. One other thing I noticed too is that I bought that right here. And then, so that's Monday, Tuesday, it hung out. This is max profit zone. Wednesday, it popped up right here. So it was right back to where it opened at. And, you know, obviously some time's gone by. So I bought that inside spread at 71. I think that was trading around 60, 65 right here. So I thought this was going to actually reverse possibly because that was a green candle at one point coming back up here. So it looked like reversal. So right in there, you could average down and buy a few more contracts. Obviously, you're taking a little risk because now you only got 2 days to get it from the center to on out, but you can buy them cheaper here at this point. Let's see. The next thing I did was 265 is where we start getting into that other iron condor, the outside one I sold. I think I let it go past 265. I was looking for a bounce. I think I closed it out when it got to like 264. And, original credit was 28, and I bought it back for, there you go, 124. So I had a 96 loss on that, but that's all right because obviously if it's all the way down here, this inside spreads at max gains easily. Even if the next day it starts to reverse coming back up into here, you can still close that out for almost max gains. It wasn't going to open up back here, obviously, the next day. The inside one I closed out Friday, that was the one I bought for 71, closed it out for 99. So you got $280 profit on it, 39%. The percent on this outside one that I sold, I don't really worry about that too much. But so total was 184 profit. Here, let me zoom in on this just a little bit. Okay, so total 184 profit, and off of my initial be $710, I've got 26% return. And that's not even including, any sort of credit or whatever that I took in. Well, no, actually, that 26% does include. It's $184 on 710. So, but you've got a pretty low risk on that. As long as the only way you can lose on this is if the stock closes or stays within that range of that zone right in here, and that's. $2 is this green box where it starts on either side, and it's been moving. I mean, obviously, we were way over $2 there, but I was kind of, if we were going to close in here, I don't know if I was going to trade this next week, but I think I'm going to, because even though we only got 4 days this next week, but that closed right on the 200-day moving average, that red line there. That's either going to bounce up or break through. The chances of that closing right here, 4 days later is pretty slim. I mean, we've had some huge price movement here, so chances are that's going to do something. So I'm going to pick up one, hoping to get into, something for around 65 or 70 per contract again, to, just 2 strikes on either side of the opening price. And I think I don't think you really have to buy that right at open, because you're buying a call spread and a put spread both. So I think that I think you could open that up like 2 hours after the market is even open, based around that opening price. Same thing on that outside iron condor. You could sell that a little bit later, and I don't think the price is going to make too much of a difference. A lot of it has to do with time decay and stuff too. So it's not going to make too much of a difference. But it kind of come up with a trade plan on this stuff too. Kind of what day, where it's at, what to do. So like say by Thursday, it's deep in the money, that inside spread. That was one of the other things too, is I'm only going to close out one side of the spread too. I'm not going to close out the whole iron condor. It's harder to get filled too, but like on our put side here, I'm just closing that out. Like I think it was like 95 is what I could have closed it out for Thursday. But obviously I wouldn't worry about that reversing too much at that point. But you could close out just the call side of, your inside iron condor, your put spread basically, or not the call side, sorry, the put side. You can close out just the put side of the inside one. And then when I got to 264, I closed out just the put side of the iron condor that I sold to, because one, in case it reverses, just went crazy. I don't think you'll see reversals that strong from here, but you could see it the opposite way. If it was up in here, it could reverse back down. So you could catch both sides of that and close it out and have profit on both sides. I'd say that's a slim chance, but the other reason too is the fees. If you're only closing out half the amount of contracts, your commissions aren't going to be as high. Closing out just one side of it. So anyway, that's kind of what I come up with for the week. Let me see how do I get back to here we go. Stop sharing. Okay, so anyway, that's what I come up with from this week. And I think that the couple of things to increase the profits would be my microphone's not working. Would be that iron condor that you're selling on the outside is actually to possibly sell that not at open price at Monday, but let the price move into one of the green zones there first. you're still going to sell the strikes based on the open price on Monday. So I think that's something that I was doing, like 85% probability out of money or something like that. So I think that's why it was slightly skewed. Like there was a bigger green zone on the bottom, which was fine. It didn't help me in that case, but it was worth a shot. So you could get a bigger credit on that. So if I brought in a $70 credit on that instead of the 28, that would help a little bit too. And like I said, the other thing that could maximize profit a little bit would be is if it does cross back through the opening price on Monday, you can add to it if you're willing to take that risk. You can add to it and average down your overall cost. Anyway, I think that's it. So I'm going to plan on putting on one Monday. So we'll kind of have to wait and see what open price is on Monday. But I would say you could almost, I'll probably on Sunday start basing it on the price that it closed at on Friday. I haven't even looked to see if it's fluctuated after hours or not, but I'd say it's going to be touching that 200-day moving average on Monday, I'm sure, at some point. So my base around that, if we have a $2 move either direction from that, I think it'll pay off nicely. The outside iron Condor, another reason too to wait on that might be to see kind of what direction it might look like it's going. Like if Monday, if we have a strong bounce, you might give yourself a little bit more room on that side than the downside too. But like I said, you could wait till Wednesday possibly to even sell that outside one and collect a little bit higher premium, because I could have done that this week actually. So anyway, we'll see how this week goes.